very much of a mixed bag. I mean, if you look at domestic demand, I think the key variable is fiscal policy, which was very tight through most of last year. They signal a reversal of that in late October, expanding the deficit target, authorizing some new local government bond issuance and so forth. And I think normally what you would expect with that kind of fiscal loosening is that after 3 or 4 months, that would start to feed through into the domestic economy. So I think that's kind of the timeline that you're looking for a somewhat more solid picture for the domestic economy. Exports is really a function of the fluctuations in global demand. I think you're cyclically in a soft spot. Structurally, I'm very bullish on Chinese exports, but I think really the key variable is what happens in the global electronics cycle. I think that's what's driving a lot of the volatility in the Chinese trade numbers.
Arthur, what's your reading of the debt and the default profile in the Chinese economy? And are the credit rating agencies right in their assessment, or is it overstated and has Beijing got this under control?
No, I think it's appropriate for the rating agencies to point out that there's a lot of debt stress. I don't think that this leads to an obvious financial crisis or anything like that, but it is an important constraint on policy. And I think that's basically what Moody's was pointing out, was that the cost of bringing the debt problems in the property sector and the local government sector under control is going to be a long-running drag on economic growth. This is not just like 1 or 2 quarters. We're talking about a few years probably. And that's going to pull down the growth rate. That's probably going to pull down government revenue capability. And so at the margin, it creates more stress on the fiscal system.